We're going to do a brief video on the Dow Jones Industrial Average stocks, and we've got a daily chart here for you of the Dow Jones Industrial Average, and we're using this particular one from Black Bull as a proxy. But let's take a look at this real quick. We've got a moving average of 5 in green, 20 in red, and a 200-day moving average in blue. Let's take a look at the Dow real quick and see several things about it right off the bat. Extreme volatility, bear market. We had a decline of a breakthrough and a beginning of a bear market here in February of 2022. We've had a good, really solid test of the 200-day moving average here for a long time between March 28th roughly and April 21st. That test was not successful getting through what had become a flat 200-day moving average, and then the Dow went into a serious bear market. We put in a bottom in this Dow back in right here at 17th of June 2022 at around the 29,646 level, and then we rallied almost straight up, not straight up but almost straight up, with great respect for the 20-day moving average, put through a little brief top of through the 200-day moving average and sold it right back down. So where does that leave us today? Well, first of all, we notice we get some decent respect for the 20-day up and down, so the 20-day moving average can help us here a little bit. We can see that when we violated this 20-day, we got extreme volatility. A couple days here later, more than 100 points on the Dow. I'm sorry, more than 1,000 points on the Dow, and you can see that we just plummeted right back down and almost put us down to our July 14th lows. So we're in a bear market still on the Dow. However, this rally from June all the way up here to August was a definite very, very positive, serious sign to get us out of this bear market in the Dow. So my best guess right now is that this, and it's a guess for entertainment purposes only, but my guess is this July 14th bottom's probably going to hold. It's a very minor bottom, but it is a bottom, and that's at about 30,128. We are currently at about 30,465, and we're down 307 points as I speak. We were down as much as 350 today. I think this bottom has a shot at holding. We obviously need to clean this up a little bit. We need to get some sideways action. We need to get the 5-day turned around. It's going to take a couple weeks to get the 20-day to stop its tremendous decline here and get it turned around. But we need to show support here almost immediately if we're not going to break through this previous low of 30,128. We really need to see support almost immediately, certainly not anything lower than the just call it the 30,200 level. If we can get some support there and go sideways for a couple weeks, we should put in a bottom here at the Dow and make another stab up, would be my guess, to a minimum of about 32.6, something like that, by the third week in October. This is assuming we hold this July 14th low, so and not really challenge it too closely. So if we can hold it up in a nice range, as I said, about 30,050, we should get these moving averages in a couple weeks under it and push it up for another stab at what would then be very close to the 200-day moving average, if you call it like 32,600, something like that. What's an alternative? An alternative is we get stabs down low here this week, violate this July 14th low, then you're going to go after this June 17th low, and if it breaks that, then it's not a good sign. Not a good sign at all. Could easily happen. Keep in mind, we're in a bear market on the Dow. We're below the 200, we're below the 20, we're below the 5. So I'm giving you both scenarios because that's the only honest way to say it. That's what I have for you today on the Dow. We do not follow the Dow index. We follow the S&P 500, which I'm going to show you in a minute. But we do cover 190 plus stocks that come out every morning before 7 a.m. These are the stocks that came out today on the 20th. Today's September 20th. We have 1, 5, and 20-day holding periods for the stocks, and again 190 plus of those. Let's go down and take a look at a trend following system we have that covers about 10 or 11 stocks, but it also covers SP 500. You'll notice today we show short for the SP 500 futures. This is the Chicago Mercantile Exchange futures contract, the E-minis, and it's got a recommended short for entertainment purposes only at 39.27. This market shows short for everything but the airlines and for NIO, and I think NIO went up today, but I'm not sure. I did a video on it earlier, but I've already forgotten. So the market does have a bear sentiment overall, at least according to our trend following algos. This algo is a trend following algo. The one I showed you earlier is not. It's just a straight algo that doesn't use trend following. This one covers in 30 days. The other one's a 1, 5, and 20-day holds. So this is more of a traditional trend following algorithm down here. That's why I show it to you. You can get everything we offer, but not this, because this is proprietary to YouTube viewers for absolutely free, no credit card required at rbamresearch.com. There's a link in the description below. You just go to rbamresearch.com, follow that link, and it'll take you there, and you sign up, put an email address in there, and you can get access to 190 stocks, the major forex pairs, BTC, crypto, and the most liquid futures contracts. Everything but the stocks will have a short or a long entry price for your entertainment purposes. Monday through Friday before 7 a.m. the stocks will have longs only, and again, no credit card required, no cost. If you like this video, please click the like button. If you want to see more, please subscribe. If you want to talk to us and be positive or negative on the use of moving averages to give you some insight into what the market's doing, please let us know in the comment section below. Keep in mind, everything you've seen or heard on here, including the commentary and our entry prices, are for entertainment purposes only. You can't use anything on here for anything other than entertainment. You should do your own analysis, and you definitely trade at your own risk.